right, welcome back to the program. As you can see there from the card that we just posted, my guest, Eniola Olabode, an investment associate with Meristem Securities Limited, is joining me right now. Hello, Eniola, and welcome to the program.
Good morning, Nancy. Thank you for having me.
Okay, let's get started. What do you think really happened at the Nigerian exchange last week? We saw 3 days of negatives as against 2 days of positives. The YTD, the year-to-date performance of the market, is still in the negative territory. This is a market that was perhaps the best in 2020 in a pandemic year, but this year is still trying to get his head above water. What do you think?
I think the investors reacted too early to earnings season. Now we're beginning to leave. So typically during earnings season, the markets will react to the performance of companies, the results published. And after results began to come in, investors took position in stock on counters that did really well. But for those that delayed their results up until now, investors have kind of priced it into their positions. So I think what we are seeing now is a rather muted stance, right? So it's not exactly a bullish sentiment or a bearish sentiment. So really, what's driving the market now is just some portfolio rebalancing efforts and some profit taking on counters that have gained significantly in the past. So it's not exactly you can't exactly call it a bullish market right now or a bearish market. It's just some portfolio rebalancing activities going on here and there.
Okay, and since you've talked about rebalancing, portfolio rebalancing, where is that rebalancing occurring? You know, what sectors are we seeing that rebalancing happening?
Okay, so I think that just like you said, it's a rotation of funds from some sectors here to another. So if you look at the results that were released, you'd see that firms in the consumer goods sector, they did really well, financial performance wise. So their results was quite good. And in that light, we saw, I think for last week, Flour Mills recorded a little gain. And across sectors like that, industrial goods, you see some rotation into counters in that sector. So it's basically, and like I said, it's not a strong sentiment. It's basically just taking funds, rotating funds from one sector to another sector, just to time the mood of the market and position in that manner. So, but for the most part, it's mainly being the consumer goods and industrial goods. And upon the release of more banking results, we should also see some positions being taken on those counters as well.
Should I take this your last statement to mean that investors this week should expect perhaps more corporate earnings, and they may also begin to position in those perhaps banks that would also release their earnings? Should I take that for this week?
I think that's very likely. That's very likely. And also considering the fact that these banks are also likely to declare interim dividends, which is also a market moving information, right? So yes, I would like to think that there will be some rotation to the banking sector as well.
Which companies have so far released their earnings that investors are really happy with? Which companies are investors really happy with? Which companies are some of your clients happy with that have released interim dividends, or they are even happy with their numbers so far?
Oh, well, okay. Like I mentioned at the start, I said the market's reaction was very temporal. At the beginning of the earnings season, we saw a lot of good numbers from the consumer goods, from the healthcare, from industrial goods. We saw double digits performance, revenue, bottom line, some strong double digits, and even in oil and gas due to low base effects from last year during the pandemic and all of that. So year on year, these companies did really well. So industrial goods, consumer goods, and oil and gas. Well, I mean, it appeared that investors had probably priced this into their decision. So the impact was not as significant as you would expect. In the consumer goods, we saw a little bit of buying interest. the flour mills, like I mentioned, on only flour, and it has even persisted for a long while. In the industrial goods, we saw buying interest also in on Danksem and WAPCO for a while, but it appears that okay, investors are moving past that now, and they are moving past that to what could be the next catalyst, right? So right now, all eyes are on the banking guys that are left to release their results. So, like I mentioned as a summary, it's just the um, the buying interest was significantly felt in consumer goods, industrial goods, and oil and gas. And now investors are waiting to see the results that will be released from the bank guys that are left right now.
Eniola, two questions before we end this session. How do you think that the inflation numbers that we've seen, at least since the beginning of this year, though we're seeing a moderation now, but it's still very high at 17% or so, how do you think that those inflation numbers really, filtered into these companies' earnings, especially those in consumer goods or even the cement sector, whereby into their input cost? That's one. The second question also is that of COVID-19 with the Delta variant right now, and I think there's another variant called Mu. Like this COVID is just mutating. How do you think that the news of COVID-19 as well as even the vaccines, did we see any filtering of health precaution, taking care of yourself right now, filtering into the companies that are into pharmaceutical companies on the exchange? I hope you understand what I mean.
Yeah, I got your first question. You might want to take the second one again, but I got the first one. For the first one, yes, inflation is a major risk, a major risk to the performance of especially consumer goods analysts. For the flour mills, for especially flour mills, they have to import a lot of their raw materials. For instance, wheat. A lot what is produced in Nigeria is not of commercial quantity, so they import over 90% of what they need right now. Of course, there are some backward integration schemes going on, but that's not going to it's not going to meet the demand for the near term. So because they have to import these things, the imported inflation, and also devaluation risks, and all of that, and also supply chain disruptions and the impact of the pandemic on supply chains, logistics, and all of that, of course, impacted their performance, cost of goods, their cost to sales ratio, where you would see that okay, there is a difference here. A pandemic actually did happen, and for the pharmaceutical guys. Of course, they also have to import their active pharmaceutical ingredients. They import almost the entirety, unlike the flour mills where they could still buy source a lot of some of their produce locally. The pharmaceutical players have to actually import their raw materials almost 100%. So yes, inflation and devaluation is a major thing. And for the pharmaceutical guys, pardon me, for the flour mills guys, you'll actually see them, and other consumer goods guys, you actually see them some of these costs to the consumers because they cannot actually bear everything. In the beauty sector, you see them, they review their prices upward periodically because having to bear it themselves would impact their margins. So they pass it on to consumers periodically. And also for the consumer goods guys, one other method they do is by trying to reduce the quantity of their products so as to maintain price and not, cause a disruption in the market regarding price wise. So they will probably just reduce the quantity and sell at the same price for a period of time, and then they now have to review the price upwards later on. But for the pharmaceutical guys, your second question, I didn't quite get the entire thing, but I think what you're trying is if COVID actually did impact their performance. COVID did impact their performance, and it was very positive. So it wasn't necessarily about vaccine because vaccines are not manufactured in Nigeria. It is actually because of an improved health consciousness and also increased demand for their other products. So you'd actually see that for their other products like the nutritional supplements, pain relievers, they actually did. So they have two categories, the prescription medicine and the over-the-counter medicines, and they actually did report improved performances across these categories for most of them, well, except GlaxoSmith. So Fitting, May and Baker, they actually did report good performances. So that's to tell you that people are getting more health conscious, and they are buying more drugs, and that is filtering into the performance of the pharmaceutical players.
Okay. Thank you very much, Eniola, for that. Let's talk again sometime soon. Thank you for that analysis. Have a lovely week.
And you too. Thank you very much for having me.
I've been speaking with Eniola Olabode, who is an investments associate at Meristem Securities Limited. Let's quickly take a break, and when we come back, Johnson Chukwu, the Group Managing Director at Carrier Asset Management, will be taking a look at the burning economic issues. So many. Where do we begin? We'll start from somewhere when we come back from this break. Do stay with us.